This is a discussion for the topic analyzing financing activity from question 1, section B, common test November 2017. Mikhail, the accountant of Mega Success, prepared the information for the board of directors to consider alternative to obtain external funding by issuing ordinary share and debt. There are two alternatives. First alternative and second. And these are the information from the statement of financial position. Total asset are 1.3 million for both alternative. Total capital and liability are the same with the total asset. The composition of capital consists of RM ordinary shares 350,000 for the first alternative and 100,000 for the second alternative. Next, 10% RM1 preference share, 150,000 for first alternative and 220,000 for second alternative. Share premium, alternative 1, 270,000. Retained earnings for both alternatives are 500,000 each. Total capital for first alternative 1.27 million. For second alternative 820 million. Non-current liability for the first alternative, bank loan 5%, 30,000. Second alternative also similar with second alternative, and 8% debenture for second alternative at 450,000. And you need to calculate the amount of current liability as at 31st December 2016. You are only given this information. So in statement of financial position, you have the amount of asset, capital, and liabilities. Only for non-current liability, but not for current liability. So you have to assume that some of the items in this statement are not paid during this current year, but will be paid by next year. So this item can be from preference shares, bank loan, and debenture. Okay, so what are the things that we can classify as a current liability from preference share? So we have dividend from preference share, right? So dividend payable can be one of current liabilities. And then from bank loan, interest, accrued interest on bank loan also can be the current liabilities. And another one is interest on debenture. Accrued interest on debenture also can be part of current liability. Therefore, there are three items of current liabilities. Okay, for the calculation on accrued interest on loan, first alternative, the total amount of loan, bank loan are 30,000 times the interest rate 5% equal to 1,500 each for both alternatives. Accrued interest on debenture, only for second alternative, the total amount are 450,000, the rate at 8%. So the accrued interest on debentures are 36,000. For preference dividend payable, the first alternative, total amount of preference shares are 150,000 times the rate of dividend 10%. So we have 15,000. And for the second alternative, total amount of preference shares are 220,000 times the dividend rate at 10% equal to 22,000. total current liability for the first alternative, you add all together 1,500 with 15,000 equal to 16,500. For the second alternative, you add up 1,500 with 36,000 and after that plus 22,000 equal to 59,500. Question B. Determine the profit available per ordinary share for both alternatives. But this information is not given in the question. But you are provided with the amount of earning before interest and dividend or profit before interest and dividend amounted to 100,000. So we need to do some calculation based on this requirement. Let's start with profit before interest and dividend. So you have to assume that this time you have to assume that all these expenses are paid during the current year, during 2016. Okay, right. So profit before interest and dividend for both alternatives are 100,000. And then you minus with interest on loan for the first alternative 1,500. For the second alternative also similar 1,500. This amount you can get from your answer in A. And for the next step is to deduct with interest on debenture. For second alternative the amount is 36,000. And third step, minus the profit before interest and tax, before interest and dividend with preference dividend. Alternative 1, the preference dividend equal to 15,000. For the second alternative is 22,000. And then you minus the profit before interest and dividend of 100,000 with interest on loan, interest on debenture and preference dividend. So you will arrive at the figure for profit available to ordinary shareholder. First alternative, the amount is 83,500 and second alternative 40,500. And then in order to get the profit available per ordinary shares, you need to divide the amount of profit available to ordinary shareholder with the number of ordinary share. The amount for number of ordinary share is not given in the question, but what we have in the statement of financial position are the total amount of shares and also the par value of that share. Therefore, you can divide the total amount of shares with the par value of the share. So, first alternative, 350,000 divided with 1 ringgit equal to 350. And then alternative 200,000 ringgit divide with 1 ringgit. So we have 100,000 ordinary share. For the preference share, 150,000 divide with 1 ringgit. So 150. The number of preference share equal to 150 and the number of preference share for the second alternative is equal to 220,000 divided with 1 ringgit. So the number of preference shares for second alternative equal to 220,000. Okay, now let's proceed with question B, the number of ordinary shares. Okay. So since we are only interested in the profit available to ordinary shareholder, therefore you just need to divide it with the number of ordinary share. So ordinary share for alternative 1 is 350,000. For the second alternative is 100,000. Profit available per ordinary share after divide 83,500 with the number of ordinary share 350,000, then we have the answer of 0.2386 for the first alternative. For the second alternative, the answer is 0.405. You divide the profit available to ordinary shareholder for 40,500 with the number of ordinary share 100,000. And for C, based on the above calculation, decide which alternative should be chosen to obtain external funding for the company. So based on your answer in B, so let's compare between the first alternative with the second alternative. So based on the profit available per ordinary share, second alternative is much higher as compared to the first alternative. So you can make a decision to choose alternative 2 because it gives more profit to ordinary shareholder. And for B, 3 characteristics of short-term borrowing are offer lower interest rate than long-term debt. Number 2, higher risk because short-term borrowing need to be repaid in near term. And number 3, classify as current liability in the balance sheet or a statement of financial position. And for the last question, 2 features attached to common stock. Number 1, common stockholder has voting rights in selecting board of director. And then number 2, common stockholder bearing ultimate risk and reward of company performance. So that's all for question 1.